Hey, I've been traveling. Told you that on Monday that I wasn't going to be posting Tuesday. The video's a little bit late today. Try to be brief because I know I'm late. Try to get back on a regular schedule here, so thank you for your patience. S&P was up almost 24 points today, up 0.42%. Again, continuing to backtest this trend line. Now, directly overhead, we have the gap fill and the previous peak. And again, Nasdaq's not there yet. S&P is backtesting this trend line and just under this area. We'll be watching to see what happens with Powell this week. Now, a couple things. We've got the FOMC minutes today. Again, yields fall. Anticipation of cuts. I told you eventually yields will go down and the stock market will go down together. A negative correlation for a very long time, and that's changing. The rally continue on today. We did get the FOMC minutes, and again, still Fed Fund futures still anticipating a September cut. I think that will be correct. Actually, the cut will lead to a reversal and a decline and a top, bring in a bear market. Historically, that is what happened. I believe that the S&P and Nasdaq are in a topping process right now, unfold in a couple of different ways. The Fed's minute, according to CNBC, the Fed minutes point likely rate cut coming in September, as market participants, I'm a little tired, sorry. Vast majority of participants, the last FOMC meeting expressed that if data continued to come in as expected, that it was likely appropriate to begin easing. Again, other central bankers have already begun this process. Now, we also had something that's going to be no surprise to anybody. The Labor Department revised down the total amount of jobs created for the year by 818,000. Continue to point out that the Labor Department is fudging the numbers. The numbers actually come in negative. Even if they continue to fudge the numbers, they're not going to be able to stop it. They're just trying to put lipstick on a pig. But, I mean, this is being done on purpose, or they're completely incompetent, one or the other. Guesses are doing it on purpose. But a staggering 818,000 fewer jobs than previously reported. And again, sorry, I am a little bit tired, but I appreciate you bearing with me. I'm just going to try to flip through the charts and let you look at the data. And try to be shorter here and just let you look at what I'm looking at. Again, if we clear this trend line, you got the high directly overhead. Are we going to hit that right now, or are we going to turn near the trend line here? Again, the RSI just extremes with this low, with the hollow candlestick, has not gotten any kind of serious pullback whatsoever. Now, MACD is positive. It was negative. Again, I'm going to be watching to see what happens. Does it remain negative or go back into, or does it remain positive or go back into negative territory? Stochastics come back up to extremes as we're at this trend line right here. And again, S&P up 24 points, 0.42%. Just flip through some of these charts that I'm looking at as we're coming up into this trend line. We got a candle decision yesterday. I told you it's a continuation or reversal. Today we had an up day. So far, S&P, these divergences on the 4-hour charts, futures, and some divergences on the hourly charts, like right here with momentum, but it's turned really just down, going sideways, and we turn back up, got the pop higher, pull back, and again now flirting with these levels some more. So again, could the RSI forming a larger divergence as I've been talking about? So again, if it's not done, we get one more reference point on the 4-hour charts, and right here again with Powell come Friday. And I keep pointing out that the momentum line, we're above the momentum line and we're above the momentum cloud. The purple line is a momentum line. You got to take it out if we're going to see a reversal, pullback. And I've been talking about these gaps. And then also directly overhead is our gap fill and our all-time high right there. So again, I'll be watching 60-minute charts. Momentum here on the S&P. And again, let me flip through some of these. Here is the 60-minute chart with our RSI, MACD down here. We had divergences on some of the indicators like the MACD. The RSI moved to a new high, and I told you RSI may try to form a divergence here. We already had divergences in the 4-hour time frame with S&P futures. I was trying to form another reference point of a divergence, and it's likely going to complete this RSI. And again, this could finish with Powell or just ahead of Powell. Again, we have Jackson Hole. Powell will be speaking on Friday. It finishes with a gap and trap. Again, it's still under construction here with our RSI here on the 60-minute chart. And again, MACD looks like it might try to form a triple bearish divergence. This peak back over here had a multiple point divergence with it. Again, when this finishes, going to be looking at the momentum line, the momentum cloud, and again, we kind of breached the trend line ever so slightly. We went sideways with the bearish divergence on the MACD, and now we're popping higher. So it happens. Now, on the 60-minute chart, we did complete a divergence. It may not be done yet, but it could finish at any time. Finishes ahead of Powell. We do have a topping tail, which did give us a divergence with the previous peak here. Turned back down, rebounded back up, and again, with today's session, we closed with another possible topping tail and a little hanging man candlestick. Again, breaking the momentum cloud, the momentum line, 20 period on the 60-minute chart. The diversions could start to play out, but just something we're paying attention to. This dotted red line up here, or I'm sorry, the solid red line up here is again where the previous peak was. But some topping tails, interesting candlesticks here in the 60-minute time frame. Momentum on the daily chart reached extremes, and again, wild swings up and down in the market. Big move up, big move down, big move back up. But really, with that move turning back up with spring parameter, we've seen peak it back above the 50, move towards the 200, and then gap higher above that. Now we do have the again this level being tested right now, and we'll see if we turn off of it or try to clear it. But we do have a rising wedge with the old trend line that is back testing with the new trend line from the consolidation sideways on the MACD that I've shown you, getting the diversions and going sideways. You do have another possible trend line there, but the old break is back testing at the moment. So again, I'll be watching to see when this rolls over. Again, I've been talking about these gaps, and you can see the back test right here on this chart. Now, this is the original trend line I drew from this low to this low right here. And now, again, with the push higher, I've drawn another trend line here on some of the charts. So I'm watching these trend lines to see what happens. And again, it could be that we did break down and got a back test, and again the divergence is coming to a conclusion. If it does here, or if it goes a little higher to complete and just ahead of Powell or with Powell, then again I'll be watching for these gaps to fill. You've got these gap and goes right here. You got this gap way down here at 54.53. We are getting, as I've been talking about, the 50 getting back above the 200 and the golden cross right there. Seeing the odds that the next pullback could be a higher low scenario, but we did have any pullback with the golden cross or the cross of the 10 above the 20. We just kind of went sideways with the bearish divergences that formed on the intraday chart. So I'll be watching. Do we get a successful back test here, or do we see the S&P try to go a little bit higher? But again, you do have a possible back test here, the break and back test of the trend line. So again, divergence looks to be under these powerful swings up and down. And again, we saw that 3-day drop over here, big rebound back up over the last 2.5 weeks. The selling over here, this rally ahead of that, these wild swings. But I'll be watching, does the divergence complete ahead of Powell or with Powell here with his Jackson Hole speech that will be during the market session on Friday. So again, you've got these gaps down here, the 5200 area, the 5345 area, and 5450 range right there. a gap way down here that hasn't been filled at 51.88. We'll be watching these gaps, watching the gap up here as well. But again, told you with the futures that divergence completing, it could form another one if we were to get a divergence here on the RSI. And let me just show you some of the charts. But when we were clearing this gap over here, we started getting back above the 50-period moving average and the 10-period. We started seeing momentum signals with this gap and go right here, moving back to fill the gap. We started seeing momentum signals begin to turn bullish. Been trying to show you these intraday charts last couple of videos. These swings back up and down, up, down, up. We are starting to see another little divergence develop here. 4-hour chart and getting it on that 60-minute chart of the S&P. But again, momentum line and trend flipping with the cloud here. It remained bearish, and then as we got back above that 50-period moving average and the 10-period of the daily, we began to see signals turn back to bullish. So what I'm watching for is, will momentum flip? I'm looking at the momentum line here in the intraday time frames. The divergence begins to play out, or we go a little higher and it begins to play out. Again, I'll be watching the gap fill here. If we begin to see it play out without filling that gap, testing that high, then I'll be watching again these other gaps that I've been talking about. But again, showing you these signals more because, again, they've been playing out. We've been getting these extreme moves up and down. And again, the diversions back over here marking the peak in the 4-hour time frame. We had a similar divergence on the 60-minute chart. But the momentum line and the trend here, momentum here and the momentum cloud, momentum with the channel here, and again we're back up at extremes here above the upper band there. So again, this is where we had a top form here before we had this, and then the extremes gave us a bounce here. This rebound was followed by this 8% drop in 3 days, and again down to extremes, and then we got back up above extremes. Watching the gap fills and the moving averages and the daily and the 60-minute time frame, we overthrew those levels, just kept going here, and extreme moves up, down, up, and over again. Balance of power positive here. This is a daily, and again, just looking again at momentum here, looking for extremes with the trend. S&P daily, and again, momentum still remains positive, but we're seeing these divergences form. Now, I told you Monday I was watching these divergences form right here, and I told you if we got another reference point, it could be the RSI forms a divergence on the 60-minute chart of the S&P cash. We had divergences in the 4-hour time frame. Nasdaq 100 futures, again, could see this thing complete ahead of Powell or with Powell, and begin to go back and fill some of those other gaps. But this diversion's done. Looks like we're going to complete this triple divergence here with Nasdaq futures. Here is the E-mini futures of the S&P 500, and they are up in after hours. The S&P's up 3 points. Nasdaq's up just over 20. Again, corrected sideways with that divergence. And again, I'll be looking to see, do we get some more green? And we'll try to continue the advance, or back test and start breaking down possible bars on the minute chart. But like I said, there is no change in trend and no reversal as of yet. Prices just recently consolidated sideways, so again, still could get more green here with the E-mini futures of the S&P 500 in the 4-hour time frame. Once that's done, then we'll probably see a drop back below the moving averages here, as the 50s now making a move to try to move above the 200 with futures. It already has moved above the 200. The 50 has moved above the 200 with the S&P cash earlier in the week. Again, Nasdaq, S&P now seeing the oscillator go into positive territory. So is the MACD. Again, they could still roll right back over if we make an attempt to fill those gaps. You get your 10 getting above the 20, but they're still both below the 50. So again, could more work to be done here. This is Nasdaq daily chart. Again, nowhere near the highs. S&P is moving back to it. Actually, Nasdaq will move back to this 20,400 area to fill that gap. See what happens with Powell's speech with Jackson Hole. Again, asterisks now becoming overbought here with Nasdaq daily chart. And again, August 13th, we saw that momentum getting above the 50, getting above the 10, and then clearing that 20-period moving average here with Nasdaq. The S&P turned above the 50-period here, the green line, and then we started seeing shortly after that, we're seeing the oscillator go positive. I'll be watching to see if they go negative again. If we do, we'll be watching the gaps in the moving averages, S&P and Nasdaq here in the daily time frame. Now Nasdaq's just under the 78.6 Fibonacci. We came back and we filled this gap right here, got above the 50 and got that candle of indecision yesterday. 0.6 Fibonacci is at 19,998. It's under 20,000. The gap fill way up here is 20,400, and the gap up here is at just under the 20,700 area. Now again, you got the 10 above the 20, still below the 50-period moving average, and we still have these gaps. We'll be watching those. Same thing here again. If we try to rally back up with momentum, we could see larger diversions develop on the S&P 500. Again, diversions here, prices just went sideways, and again, Nasdaq, you're still holding above the pring parameter and the momentum cloud there. The 50 back above the 200, and again, these are the gap fills for Nasdaq. You got three of them here. Nasdaq did fill a gap at 19,754. It's also now becoming overbought here. That's the thing here on the Dow. Again, it's forming this divergence. Could be done. Could get another push higher and then complete it here ahead of Powell or with Powell. But keep your eye on these 60-minute charts with the RSIs. So again, going to be watching these RSIs on the 60-minute chart. Is the diversions done? Is it not quite done? Again, are we S&P back test the trend line? And if so, then Nasdaq 60-minute chart can wrap it up too. Again, had a diversions back up here at this peak and something similar to that right here and now. So again, in order to see things flip, the momentum line has to flip back to bearish, drop below it and take out the momentum cloud. And so that's what I'm watching on some of my charts.